November 15, 1923. A German woman walks into a bakery carrying a suitcase full of cash. She's buying one loaf of bread. She pays. The suitcase stays with the baker. It's not worth the trip home. 2 years earlier, that same loaf cost 1 single mark. Not 200 billion marks. 1. The bread didn't change. The money did. Before World War I, Germany had one of the most trusted currencies in the world. For marks bought $1. That rate held for decades. A whole generation built their savings around. Then Germany lost the war, and the Treaty of Versailles handed them a bill that was almost designed to be impossible to pay. 132 billion gold marks in war reparations. For a country that had just lost everything. 132 billion gold marks. Germany's entire yearly economic output was roughly 50 billion marks at the time. They owed the world 2.5 years of everything they would ever produce. Germany had one real option: print money to pay the bill. By 1921, $1 cost 60 marks. Painful, but survivable. People still believed in marks. That belief was about to get tested. January 1923. France and Belgium said Germany was behind on payments and sent troops into the Ruhr, Germany's industrial heartland. Germany told every worker there to stop. Passive resistance. The government funded that resistance the only way it could, by printing marks, around the clock. By August 1923, $1 cost 1 million marks. That is not a typo. 1 million. And it kept accelerating. By October, prices were doubling every 3.5 days. This is where normal math stops working. These are the actual numbers at the peak. Monthly inflation, 29,525%. Time for prices to double, 3.7 days. Exchange rate, for 0.2 trillion marks per dollar. Price of one loaf of bread, 200 billion marks. People started hauling cash in wheelbarrows just to buy groceries. There are accounts of thieves robbing them on the street. They dumped the cash on the ground and stole the wheelbarrow. A wooden cart was worth more than a pile of banknotes. Employers stopped paying workers weekly, then daily, then twice a day. You ran to the market at lunch to spend your morning wages before they lost value by dinner. Not next week, not tomorrow, by dinner. In 1914, 4 marks bought $1. 9 years later, 4 trillion marks bought that same dollar. Not 4,000, not 4 million, 4 trillion, the same currency. 9 years apart. Here is what that collapse looked like on a timeline. The line is flat for years, barely moving. Then it goes nearly vertical. That is the mark dying in real time. A postage stamp that cost 40 Pfennig in 1921 cost 100 billion marks by November 1923. The same stamp, 250 billion times more expensive. In 2 years, the stamp didn't change. The money became worthless. November 15th, 1923. Germany launched a new currency called the Rentenmark. Backed not by gold, they had none, but by a legal claim on Germany's land and factories. A mortgage on an entire nation. One new Rentenmark equaled 1 trillion old marks. If you had held 1 million marks as savings, years of work, you now had 1/1,000,000th of one new Rentenmark. Effectively nothing. Decades of saving gone. The hyperinflation stopped almost overnight. Within weeks, prices stabilized. A catastrophe that had seemed unstoppable ended in days. But here is the part nobody mentions when they tell this story. The people destroyed weren't the poor, weren't the government. It was the middle class. Teachers, doctors, engineers, shopkeepers, people who had saved their whole lives in marks. Those savings were now worth less than the paper they were printed on. Here is why this matters to you right now. You're not in Weimar Germany, but you're holding a currency that loses value every year. In 2024, $1 bought what 87 cents bought 5 years before. That's mild inflation, but the mechanism is identical. More money chasing the same amount of goods. The people who survived 1923 with their wealth intact held real things. Land, companies, assets that kept their value when the currency didn't. You don't need land. Step 1. Open your brokerage app. Step 2. Check how much of your money sits in cash. Step 3. Move a portion into a broad index fund. Real assets protect you from slow inflation in a way a savings account never will. That gap, held for 10 years, turns $10,000 into either $8,200 or $25,900 from the same starting point. The only difference is whether you held cash or held real assets. 1923 Germany was extreme, but the lesson is ordinary. Money is a promise, and promises can erode slowly or all at once. The people who understood that held real assets and survived. If this changed how you think about your savings, subscribe. Every week, we cover the mechanics of money no one taught you.